So today we're going to be covering the basics of the IBD way, a system created for the individual investor. Now there's four basic parts to the IBD way, I call it, and I'm trying to do this to make this really simple for everybody so they can understand exactly what Investors Business Daily is. So the first thing that you want to look at in the Investor Business Daily system is the big picture, which will cover that. That gives you your market trend, whether you should be in the market or out of the market. Second thing we're going to cover is CAN SLIM, what that is. Each letter stands for something. This is how you choose what you're going to buy. Then we're going to cover a little bit on charts and how to use them to enter and exit. So we're not going to get real detailed on this, but we're just going to cover basically what a chart looks like and a couple small things about it. The fourth thing is portfolio management, which includes the stop loss rule and some on position sizing within your portfolio. So the big picture is found on the B section of the paper and online. So the market trends we want to follow, there's basically three. Confirmed uptrend, market under pressure, market correction. So when we're in a confirmed uptrend, which as you see in this little box over here, that's part of the this section that's in the paper on B. You want to be in the market at that point. The market floats between these three and it can do it pretty rapidly in and out of them. Market under pressure, you've probably already started to sell some of your portfolio. Market correction, you're going to be pretty light in your portfolio. In severe corrections, you're probably going to not own anything. Going to be pretty much to cash or going short. So there's also a larger article to read with this. It's a great place to find a lot of your stock picks. So there's where you can find it online. So CAN SLIM, the C stands for current quarterly earnings. We want to look for 25% or better current quarterly earnings in the last 3 quarters minimum. A stands for annual earnings. There we're looking for 3 years of 25% or better. This really cuts your list down. And N stands for new product, new service, new management, or new price high. We can have an older company comes out with something new, reinvents itself. Studies of great stock market winners of the past all have the same new. Something's changed. In the SLIM part, we have supply and demand for the S. As more investors demand a limited supplies of shares, well, guess what? It goes up. You want to look for heavy volume accumulation by your institutional investors. They're the ones that move the market. Is this a leader or a laggard? Buy stocks in leading industries and leading groups. Look for the best of the best in the leaders and strong industries that show superior earnings growth and sales. You want to see their sales up too. I is for institutional sponsorship. 75% of all market activity is professional investors such as mutual funds, pensions, and the like. So obviously they're going to push it. So if you start seeing volume in stocks, that's probably them coming in and buying. And M is for market. We already talked a little bit about that. You know, you want to be in when the market is in a good trend. So this really helps on limiting down. If you go on investors.com, you see the link there. It's called Mr. Stock Doctor. Punch a symbol in there. You're going to have red, yellow, or green. That's all you really need to know. This does a lot more than that. As you can see, you've got green bars there. It's also going to suggest other stocks that are highly rated. IBD has its own rating system. As you get more advanced in all this, you'll learn that as you go along. But really, this can really help you. It also gives you a lot of other ideas. If you click on those green bars, it'll regroup them by whatever that, like rank with group, or accumulation distribution rating, SMR, however you want to do that. So this is a really good tool. Okay, where do you find the stocks? You can find them in the paper online, the IBD 50, Big Cap 20, IPO Leaders, Your Weekly Review, and the New America. So that's the place, and you go through those lists and watch, and that's where they're going to be popping up. So a little bit on charts. The first thing we're going to look at in charts is the price action. So as you see there in the bottom, we have blue and red bars. A red bar is a day closing down lower than the previous day, and a blue bar is a day closing up. The slash is the close of the day or the current price. The top of the bar and the bottom of the bar represents the high and the low. So if the bar is red, it was a down day, blue was an up day. Second thing we're going to look at on a chart is volume bars. Basically work about the same. Red is a down day, blue is a higher volume day, and then the little red line is your 50-day moving average from the past. So this shows you the number of shares, whether it's being accumulated or distributed by where it's landing in there. Okay, we have the moving averages. So on this little chart here, we have two of them, the red line, the black line. The red would be the 50 days since we're looking at a daily chart. We also have weekly, which would be a 40 week or 10 week and a 40 week line on a weekly chart. The horizontal black line tracks the average of the 200 days, yet the red one tracks the average of the 50-day line. So normally we're wanting to see our stock above that line to be in an uptrend, and we're wanting to see it move on up. The fourth thing is the RS line, which this relative strength, this line compares the price movement of that particular stock to the price movement of S&P 500, which is often used to represent the overall market. If the line is trending up, the stock is outperforming the S&P 500. If the relative strength is trending down, it tells you it's lagging. So that's that squiggly line there you see just beside the 4. And you're kind of wanting to see this in the 12 to 3 o'clock area for when you're buying your stocks. So portfolio management, the fourth part. Always sell a stock if it falls 78% below what you paid for it, no questions asked. This is like buying insurance. It protects your capital. Take most of your profits at 20%. This gives you a 3-to-1 loss ratio. So you can be wrong 3 times and still not lose any capital if you follow this. And most of the time you're not going to be taking 7 to 8% losses unless the market turns on you. So this helps you protect capital. Only own 3 to 7 stocks. Don't over diversify. Sell losers, add to the winners. Never get too much percent of a portfolio in any one stock or sector. You have to be careful of that. Related stocks in the same sector, if you had 3 of them and that sector takes a dive, could cause some problems for you. So for example, if you have $100,000, you'd have maybe 5 positions, 20,000 in each position, and you can put 10 to 15% more in the true leaders. Layer into the position and at proper buy points during a market uptrend from base patterns. So in other words, you might buy 50% of one of these $20,000 positions, and then as it moves up a couple percent, go ahead and add to it a little more, even maybe adding the 10 to 15% as the stock shows it's a strong stock. And in another one of these PowerPoints, I'll be covering what base patterns are, and you can do a lot of learning and reading on that on your own. So resources, investors.com, under the How to Invest section, there's really extensive online training. It's very good. If you go through that in order, you're pretty much going to have it figured out. Some books, How to Make Money in Stocks by William J. O'Neill. That's probably the Bible of all this. If you want a simpler one to read, Getting Started by Matthew Galgani is really good. And then some motivational would be Success Stories by Amy Smith, showing what some other investors have done with this. Another good thing to do is review the PowerPoints. There's 1 to 13 of those in my meetup.com under pages. You'll want to go in there, and those were made about 3 or 4 years ago by IBD. Go ahead and take a look through those. They will really help you understand all this a lot better quickly. So other tools, investors.com, mentioned that a couple times. More advanced investors may want to try Leaderboard. They mark the charts up for you, show some patterns. Pretty good service, a little more extensive charting than it's on investors.com. And then if you want even more than that, what I really like is MarketSmith. You can really do a lot in there. It takes you a little bit of time to learn, but it really does a lot of the work for you, especially in the CAN-SLIM part and putting all the numbers together. So thanks for listening, and that's basically IBD, what I call in a nutshell. Thank you.